Hello and welcome to this Forex Preview at XM.com. I'm Maria Bashardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing upcoming UK data and the outlook for the pound. So Marios, now that the spotlight has come off Brexit, it seems that all eyes will be on the Bank of England. Now we'll get inflation data on Wednesday and retail sales on Friday. How important will this data be in the debate about a rate cut in the coming months?
I think they're going to be extremely important. So we get two of the most important pieces of data out of the UK this week. The UK economy has been slowing in general over recent quarters, let's say. Now, the Bank of England was really hesitant to act while the political situation was so fluid, let's say. But now, with the election out of the way and with Brexit, let's say, out of the spotlight, the Bank of England seems ready to stimulate the economy if needed. So we've had a few very important comments, I would say, from some Bank of England members lately. So 2 out of the 9 policymakers voted for a rate cut at the last meeting. The governor came out in the meantime and said he would also consider a rate cut. And we've also had 2 more officials come out in recent days and state their support for a rate cut. So now that means there's 5 out of the 9 Bank of England members who are really either voting for a rate cut or considering to vote for a rate cut. Now, what I find extremely important is a comment by the latest Bank of England official that came out in support of a rate cut. His comments were very interesting. He said that in order for me to justify waiting for a rate cut, I would need to see an imminent and significant improvement in the data. So unless we see, the data polls really pick up over the coming weeks at least, I would argue that the Bank of England is more or less likely to cut rates over the coming months.
So bearing all this in mind, what's the outlook for the pound?
Well, considering that the markets are still not fully pricing in a rate cut, I would argue that the risks surrounding the pound are tilted to the downside. So right now the markets are pricing in an 80% probability for a cut by the end of the year. By May, that's only 50%. So I believe that unless we see that data, really pick up, we are likely to see that percentage rise over the coming months, especially for the May policy meeting when you get the next inflation report, so with updated economic forecasts and so on. So long story short, assuming that Brexit risks remain dormant over the coming months, I would argue that we are likely to see the Bank of England, if not cut rates, then signal very strongly that it might cut rates, which would argue for even more downside in the pound.
Marios, thanks so much for joining me.
Thank you.
And thanks for watching at XM.com.